could you share with us what are some of the key features of a stock option?
Sure. So some common features between all types of stock options are they all have a strike price. And that's the price at which you are allowed. A stock option basically allows you to buy typically company stock at a predetermined price. And that predetermined price is the strike price. They have a finite life. So there is an expiration date, and that's the date at which the options go away. They are no more. And typically the options that I've seen have either a 10-year life or a 7-year life. But all of this is spelled out in a person's stock option agreement. There is a vesting period. So usually when options are granted, you don't get to access them all at once. They're usually given to you in bits and pieces over a period of time. You know, typically it might be 25% vesting per year over 4 years. So after 4 years, you have access to the full grant. The grant date is the date which the options are actually granted to you. We'll talk a little bit about a couple of concepts of value. One concept is intrinsic value, and it's also called the bargain element. And this is the difference at any point in time between the strike price of the option, the price at which you can actually buy the stock, and the current stock price. And if the current stock price is higher than the strike price, then there's an intrinsic value there, and that's the difference between the two. There's another concept in valuing options, which we'll get into, and this is the time value. Because the options give you the right to buy stock at a predetermined price for some period of time, even though an option might not be in the money, there might be a bargain element of 0, there's still a value associated with that option because there's a possibility that that stock could go up in price between grant date and when the option's exercised. And so there are some ways to calculate or to apply a value to that time. Does that all make sense?
It does. So like even if I haven't exercised it, the option has some value to it.
That's right. And even if the option, if the stock price hasn't moved from the grant date, that option still has value because it gives you the right to buy the stock at a predetermined price.
So I think you were going to show me an example of just like a very simple situation of a hypothetical stock.
So we'll talk about a hypothetical company, GMZ company. Those are my initials.
Yeah.
So GMZ company, we have Executive Joe who comes to work for me. When Executive Joe comes to work, Joe receives 10,000 options. The options are issued at $5 a share, which is the current stock price of GMZ company when Joe came and got his option grant. And Joe's going to vest in those options 25% per year over 4 years. So in my example here, every year on the anniversary date of those options, Joe has access to 2,500 of the 10,000 options. So after 4 years, then he's got access to all 10,000 options. And let's assume an expiration date 10 years after grant.
Okay, so he's got 10 years in which to make up his mind as to whether or not he's going to exercise these and actually get the stock.
That's right.
But he doesn't have to do it until he actually wants to.
That's right. So he has control over the timing of when he exercises the options, and that has some implications for realizing an income tax event.
Okay.